You are watching Carlyle Speaks Wall Street, and right now Apple is currently trading at a record high price. The current quote that I'm seeing right now, reported on the NASDAQ stock AAPL, is 133.61, just dropped down to 133.60. So it is currently at a record high, and I want to talk about whether you should be thinking about buying it or not buying it. Now, first of all, don't look at this as like a stock tip. I'm not going to tell you whether you should actually make a decision to buy or sell Apple right now. What I'm trying to explain to you is a certain concept that I want you to understand that is relevant to what's happening right now. So what you should take from this is learn how to perhaps think about, when you're trying to make a decision process, when you should buy, when you should sell, based on the current performance of the stock that you're looking to invest in. So again, rather than telling you about what's happening right now, this is a concept that I want you to understand and apply in the future. So right now, let's take a look at the Apple stock. I'm going to share my desktop for you guys. All right, so you should see my screen now. So the news came in today, CNBC. Here's why Apple shares near a record high are still undervalued, according to UBS. So UBS is saying it's undervalued, meaning that they're thinking it's going to go even higher. Even though it's so high already, I think it's going to go much higher. CNN is reporting Apple stock is nearing a record high. The iPhone maker's stock hit 133.76 in early morning trading on Monday, putting Apple less than $1 away from its intraday trading high of 134.54, reached in April 2015. Now, initially, when I see stuff like this, my instinct is not to buy, but rather to sell. Now, again, I'm not giving you specific recommendations based on this particular stock. What I'm saying is, and I'll just keep it, it's a KISS, right? Keep it simple, stupid. So the basic idea, I'm sure you've all heard, this is the fundamental. It's just like with diets, there's all kinds of fads and this and that. But when it comes down to it, it's diet and exercise. Balanced diet with a good amount of regular exercise, right? Forget about all the gimmicks and all this kind of different things and, try this, buy that. It comes down to the fundamentals, diet and exercise. So when it comes to stocks, fundamental concept, buy low, sell high. Buy low, sell high. Now, it's not as simple as that. Of course, there's more to it than that. It's essentially a fundamental concept that you need to understand. So if I apply it to what's happening now, buy low, sell high. Makes sense. You want to buy at a discount, right? And you want to sell at a premium. You want to sell when something has its most value. You want to buy when its value is the lowest. Understanding or with the anticipation that it's actually going to go back up, because of course you want to buy a stock at its lowest price if it's going to stay there or go even lower. You're buying with the intention that this is going to trend back upwards, and that's where you're going to make your profit. So when I hear about something that's it's stock is going up and the price is high, generally I'm not encouraged to buy, because this is what you got to understand. You got to understand the playing field that you're dealing with. You have people that their jobs are to do analysis on Apple, right? They're looking at all kinds of data. They have a lot more information than you do. They have a lot more skills and knowledge and know-how about how to interpret the data, how to interpret the information that they have available to them about Apple as a company. Not just Apple as a company, but looking at the market. I don't mean stock market. I mean in terms of business. The area of business that Apple is in. So you're looking at Apple, you're looking at its competitors, you're looking at the technology that Apple is dealing with. You're looking at technology trends regarding technology that Apple is dealing with. You're looking for the future. Apple is really spending a lot of money on this, but paying attention to the technology sector, you see that there's a new trend coming out, and you don't see Apple really having much know-how in that area, and that new area potentially threatens Apple, because this new product, when it comes out, it's going to be a lesser demand for Apple's primary product. You're looking for things like that. So you have people that they see all this, they understand all this, right? So they're better prepared to make decisions. They have real-time quotes. They have all this stuff at their disposal. So what does this mean? This means that while you're sitting there looking at the news, oh, look, they said Apple stock is high. These folks already, many times, not always, many times already knew and predicted, kind of had wind of something that was happening that might lead to this rise in the Apple stock. They perhaps already placed their orders. Now, if you look at my video, I did a video about limit orders. So you can place an order with limits on them. So you can say, only execute this order at this price or better. So they can set the price based on where they think Apple is going in anticipation of that. And then they can kind of sit back. And then if they're right and Apple does rise sharply, they can jump in on that rise and potentially jump out before it may drop back. Because sometimes a stock will spike and fall back, right? So they may want to have, like a day trader, for example. They don't want to hold positions at the end of the day. So they may want to take advantage of upward movement in the Apple stock the day. So, they place an order with a limit. If they're right, their predictions are correct, the Apple stock rises, triggers their limit, their order goes live, they get executed at that price. If it continues to rise as anticipated, there's their profit. And if they can exit or close out their position, basically sell the stock at the right moment, then they can maximize the profit on the day, meaning taking advantage of the widest range from low to high, meaning their entry point. They entered at $133. The furthest away from $133 that the stock went in a positive direction was $150. So that'll be the best place for you to sell. Buy at $133, sell at $150. You've made the maximum amount of profit that you could potentially make on a basic equity order. But of course, that's a perfect world. You're not going to get perfect like that. The stock price is going to fluctuate throughout the day. So you bought at 133, maybe went to 150, but by the time you place your order, it dropped back to 140. So then you lose a little bit of profit. But bottom line is, if a stock is rising rapidly, a lot of people who have a lot of money, corporations, really, institutions, they are aware of this, and they're going to place their orders, and they're ahead of you, right? So they're ahead of you. They place their orders, and they rise with the market, and then there you are coming as an individual after the fact, trying to jump in, but the party's already over by the time you get in. This is what happens a lot of times. You place your order, and the stock is already at its peak price for the day, and the market has already reacted. Everyone sees, oh, the stock is rising, and we place the order, place the order, place the order. All these orders being placed, and then it's rising and rising and rising, and it's kind of a domino effect. People see other people buying, so other people buy, and then you come in late to the game. The party's already over. Everybody's already bought at a good price, and so many have already potentially sold already. They don't want to hold the position. They want to get that quick rise, get the profit, and get out. And now here you are coming in after it's old news for now, right? So the frenzy's over. People are actually closing out their positions, so the stock price may actually fall back a little bit. And as it's falling back, there you are placing your order. So it goes in at, let's say it's $135. You bought in $135, and then a few hours after that, it drops to $133. So basically, you're taking a loss. And then who knows where it's going to go from there? You know what I mean? So the thing about it is, generally speaking, when a stock is going up, that generally scares me away. Now, there are obviously times where you will want to take advantage of it because it may continue to rise, but you got to have the data that supports that theory. This is not just a momentary thing. That stock is actually going to continue to rise. I mean, if we even look at here, where you see this display here, you can see the stock here, right? And then here's the potential opportunity. Oh, Apple's trading at a high, and you go and you buy in at this price. So right now at this time in the graph here, it was trading at $132.54. If you bought in here at 132, you would immediately take a loss going from 132 to now it's 121. That's a huge loss because you bought, it's sort of record high, right? Generally stocks go up and then they go down, right? So if a stock is rising, you got to anticipate that what's around the corner is for it to fall back. Now, stocks can rise for quite a period of time because if you look right here, Apple stock from 2013 to what year are we in? 2015, generally speaking, was rising. That's a general pattern. So if you bought in 2013, you did really good. Thing is, you'd have had to have realized that around 2015 was a time to sell, right? Because all that profit that you gained going long on Apple, you're going to start losing that because look at that, the stock started going down. You won't know that. At this point in time, you don't know that. It's been rising for all these years. You're looking at your account. You're like, yeah, I'm doing good, man. Look, it's awesome, right? You have no idea the stock's about to start going down. Pay attention. I mean, if we look here at the news, we can see here dividends. There's a lot more news stories than that. This is kind of far back. But you can look at news around that period of time. So let's say 2015. I don't think this is going to go back that far. Probably have to do like a special search or something. Let's see, date. I mean, we're looking historically back, right? But if you're currently you have a position in a stock, you want to keep an eye on the news reports and see what's going on, because the news can give you indication of potentially where the stock might be heading in the future. So perhaps there might be writing on the wall that was occurring in the mid 2015 time. And if you're paying attention enough, you say, you know what, I don't like this. I don't like what I'm hearing. I'm going to sell my stock. And you would have sold at perfect time. That's your maximum profit. From when you bought till then, that is the most amount of money that you could have made. So if you sold right then, you are a genius. You made out very, very well. For people that were perhaps too greedy and held on to it, even seeing it's falling a little bit, it's going to come back, and then it starts to come back a little bit. Okay, I'm good. I'm still down, but it's going to come back, and then it falls even further, right? And you really freak out, and then you sell. But then right after you sell it, it rises again, still below where you bought it, but if you held it even longer, eventually you would have passed up where you were, so profitable. But that's a long time waiting for that profit, right? So generally speaking, when you're considering purchasing a stock and you're looking at potential peak performance, stock's doing really well, stock price is rising, everyone's buying, it's all over the news, just consider, again, know the playing field that you're dealing with. I mean, you have people that, again, they're already aware of this information. It's old information you're looking at, and they may have already acted on it. And you, again, may be late to the party. So this is Carlyle Speaks Wall Street. And again, not a recommendation to buy or not buy Apple stock. This is really just a lesson for people that are looking to get into trading, and I want you guys to kind of understand. I think a lot of people, the instinct is, the stock is doing well, it's rising, that's a great time to buy. But for me personally, I want to see that a really good, solid company that has a really good future is going through a temporary performance issue. So that whatever it is, something happened. It could be market wide, right? Economy's not doing well, or something's going on that's affecting all the stocks. If you look at Dow Jones Industrial or whatever it is, look at whatever index that shows general market conditions, showing that the performance of the market is generally down. To me, I look at that as an opportunity to buy, because I say, so Apple is down by $5 per share, but it's only sort of following the market conditions. The market is down about that much, so Apple is following the market. So when the market recovers, so will Apple, because Apple's a good company. It's not that Apple's doing bad, so there's no reason for me to be afraid of Apple. So Apple right now is, I'm not saying literally, but I'm saying in my scenario, my hypothetical, Apple in that scenario might be considered to me to be undervalued because the stock price was $5 higher. The only reason why it's $5 lower now is because it's following the market conditions, right? So I would say this dip is not a problem with Apple. It's a problem with the market. As long as I feel the market will recover, I can anticipate that Apple will recover. So therefore, I could make a profit, right? So Apple recovers. It recovers at $5, and that $5 is my profit, right? So that's kind of the way I look at things. Anyway, this is Carl Speaks Wall Street. Going to be a lot more videos coming out. Those of you guys that subscribe because of my SQL video, go to udemy.com, take my courses, get certified. Also, go to my Facebook page. A lot of content's going to be there. I'm going to be giving you guys discounts on my courses as well. I'm doing a full SQL course. I'm going to be doing a fixed protocol course. And we'll also do some trading related courses as well. Things like that. So stay tuned. I've been listening to you guys, hearing a lot of positive feedback. You like the style, you like the energy. So I'm going to be giving you guys a lot more content, but not just on YouTube where it's just like you and you learn and it's great and everything. I want to do stuff on Udemy where you can actually get certified and I can really deliver premium content for you guys. And once again, discounts given to all of my subscribers. Thanks for watching and have a good day. Buongiorno. Ciao.